Welcome to today's video, where we'll analyze SoFi Technologies and predict where it might be headed by 2025. If you're curious about whether SoFi is a great investment opportunity or a risky bet, you're in the right place. I'm Den, a financial analyst with years of experience specializing in stock market insights and investment strategies. In this video, we'll break down SoFi's business model, examine its recent financial performance, and discuss its growth potential. We'll also dive into the risks and challenges the company faces in a competitive fintech landscape. Finally, I'll share my expert predictions for SoFi's stock by 2025 and provide practical advice for investors. So make sure to stick around until the end, as you won't want to miss any of these valuable insights. Overview of SoFi Technologies. SoFi, short for social finance, was founded in 2011 with the goal of helping people achieve financial independence. The company initially started as a student loan refinancing platform, but has since expanded into a wide range of financial services. These services now include personal loans, home loans, investment management, and even banking solutions. SoFi differentiates itself by offering an all-in-one platform, giving users access to multiple financial tools in a single app. Its target audience is primarily younger, tech-savvy consumers who value convenience and digital-first solutions. Compared to traditional banks, SoFi prides itself on faster service, lower fees, and a more user-friendly experience. The company also stands out from competitors like Robinhood and Lending Club with its diversified range of products. Additionally, SoFi has made significant investments in marketing and customer acquisition to strengthen its brand presence. In 2020, SoFi went public through a SPAC merger, which brought increased attention to the company and its stock. Today, it continues to grow by expanding its offerings and reaching new markets. Current financial performance as of 2025. Now let's dive into SoFi's financial performance, which gives us a clearer picture of where the company stands today. In its most recent earnings report, SoFi posted revenues of $2.2 billion for the fiscal year, reflecting a year-over-year growth of 38%. The company's adjusted EBITDA turned positive for the first time, coming in at $250 million, a significant milestone for any fintech. Customer acquisition remains strong, with SoFi adding 1.5 million new members last year, bringing its total membership base to 9 million. Deposits in SoFi's banking division have surged to $10 billion, up from $7 billion the previous year, indicating growing trust in its services. Its loan origination business remains a key revenue driver, with personal loans seeing a 50% growth in volume due to competitive interest rates. On the other hand, student loan refinancing has faced headwinds, partly due to the pause on federal student loan repayments. SoFi's stock has been trading in the range of $12 to $18 over the past 6 months, reflecting a moderate recovery from its 2023 lows. This recovery has been fueled by improved profitability metrics and investor confidence in its long-term growth story. Growth drivers for SoFi. Let's talk about what's fueling SoFi's growth and where the company could go from here. One of the biggest drivers is the continued rise of fintech adoption. According to a 2024 McKinsey report, the global fintech market is projected to grow at a compound annual rate of 15% through 2030. SoFi is well positioned to capture this growth due to its diversified offerings and strong brand reputation. The company's push into digital banking has been particularly successful. Its checking and savings accounts now offer an attractive 4.5% annual percentage yield, making it highly competitive in the market. SoFi's recent acquisition of Technisys, a cloud-based banking platform, has enhanced its technological infrastructure and scalability. Another growth driver is its investment platform, which continues to attract millennials and Gen Z investors. In fact, SoFi Invest now manages $40 billion in assets, a 25% increase from the previous year. Additionally, SoFi's NFL Stadium partnership and targeted marketing campaigns have increased brand visibility and consumer engagement. Its focus on providing a seamless user experience through its app has resulted in higher customer satisfaction and retention rates. Finally, SoFi's expansion into business banking and new lending markets could unlock additional revenue streams in the coming years. Risks and challenges. While the growth potential is exciting, it's important to address the risks and challenges SoFi faces. The fintech space is highly competitive, with companies like Robinhood, Lending Club, and even traditional banks vying for market share. Additionally, rising interest rates could pose challenges for SoFi's loan origination business, as borrowing costs increase for consumers. Another concern is regulatory risk. The Consumer Financial Protection Bureau and other regulators are scrutinizing fintechs more closely, which could lead to compliance costs or operational restrictions. Profitability, while improving, is still in its early stages. If SoFi fails to maintain its positive EBITDA or meet revenue expectations, investor sentiment could quickly turn negative. Macroeconomic factors, such as a potential recession or weakening consumer spending, could also impact its loan performance and default rates. Finally, the company's stock remains volatile, which could be a concern for risk-averse investors. Despite these challenges, SoFi has shown resilience and the ability to adapt to changing market conditions. Understanding these risks is essential for making informed investment decisions about SoFi. Prediction for SoFi stock in 2025. Now let's move on to the part you've been waiting for. Where is SoFi stock heading by 2025? To make an accurate prediction, we need to analyze both the bullish and bearish scenarios while factoring in market trends, company performance, and economic conditions. Bullish scenario: in the most optimistic case, SoFi continues its strong growth trajectory across all its business lines. Let's start with revenues. If SoFi maintains its current compound annual growth rate of approximately 35%, we could see revenues reaching $4 billion by 2025. Profitability is also key. The company's adjusted EBITDA turning positive in 2024 sets the stage for sustained margin improvements. Analysts predict that SoFi could achieve a net income margin of 10% by 2025, equating to around $400 million in net profits. SoFi's membership base is projected to grow at 20% annually, which means it could surpass 13 million members by 2025. Its deposit base in banking could easily double, reaching $20 billion, providing a cheap and stable funding source for its lending operations. The fintech industry's macroeconomic tailwinds, including increased adoption of digital banking and investing platforms, provide additional momentum. With these factors combined, SoFi's stock price could rise to $25 or even $30 per share by 2025, representing significant upside from current levels. Bearish scenario, however, it's crucial to understand the risks that could limit SoFi's growth and impact its stock price negatively. If interest rates continue to rise, the cost of borrowing for consumers might suppress demand for personal and student loans. Regulatory changes could impose new compliance costs or restrictions that hinder SoFi's ability to innovate or scale its business. If competition in the fintech space intensifies, SoFi might face pressure on its margins, especially if it needs to spend more on customer acquisition. Economic downturns or a recession could lead to higher default rates on SoFi's loans, impacting profitability. In a worst-case scenario, these factors could limit SoFi's revenue growth to under 15% annually, keeping it at around $3 billion in 2025. If profitability goals are not met, investor confidence could falter, and the stock price might struggle to stay above $10 per share. Likely scenario. Now, what's the most realistic prediction based on the current data and market conditions? SoFi's diversified business model, improving profitability, and strong customer acquisition suggests that moderate growth is the most likely scenario. Revenues could realistically grow at a rate of 25% annually, putting them at approximately $3.5 billion in 2025. With improving economies of scale and a growing deposit base, SoFi's net income margin could stabilize around 8%, translating to $280 million in net profits. Membership growth of 15% to 18% annually would push its total members to around 11 to 12 million. Given these factors, SoFi's stock price could settle between $18 and $22 per share by 2025, offering a balanced mix of growth potential and risk. Key factors to watch. Several variables could swing SoFi's performance in either direction. Watch for changes in the regulatory landscape, as any major legislation affecting fintechs could be a game changer. Monitor interest rate trends closely, as they directly impact SoFi's lending and profitability. Keep an eye on competitive dynamics in the fintech sector and how SoFi responds to new entrants or innovations. And finally, track the company's ability to execute on its growth strategies, including international expansion and business banking. Conclusion: SoFi has tremendous potential, but like any investment, it comes with risks. For investors, the stock could be a solid play for growth within a diversified portfolio. However, it's essential to weigh the potential upside against the inherent risks, particularly if you're a risk-averse investor. As always, these predictions are based on the best available data and trends, but no forecast is guaranteed. Make sure to stay informed, review quarterly earnings reports, and adapt your strategy as new information comes to light. Investment advice. Now that we've analyzed SoFi's business, financial performance, growth potential, risks, and stock predictions, let's talk about investment strategy. SoFi could be an excellent choice for investors looking to add a growth stock to their portfolio. Its focus on innovation and its unique position in the fintech space make it a compelling long-term investment. However, it's important to assess whether it aligns with your personal risk tolerance and financial goals. For risk-tolerant investors, SoFi offers the potential for substantial returns if the company continues to execute its growth strategies effectively. Younger investors in particular might find this stock appealing as part of a broader portfolio focused on technology and disruptive industries. On the other hand, conservative investors should approach with caution. SoFi's volatility, coupled with the uncertainties in the fintech sector, may make it less suitable for those seeking stable, income-generating investments. Regardless of your risk appetite, diversification remains critical. No matter how promising SoFi appears, avoid over-concentrating your portfolio in a single stock or sector. Instead, balance SoFi with other assets like index funds, bonds, or dividend-paying stocks. If you're unsure about how SoFi fits into your investment strategy, consider consulting a certified financial advisor. Remember, investing is not a one-size-fits-all approach. Let's wrap things up with a quick summary. SoFi Technologies is a dynamic player in the fintech space, offering innovative solutions that cater to a younger, tech-savvy audience. The company's impressive revenue growth, increasing customer base, and expanding product offerings demonstrate its potential for long-term success. However, risks like regulatory challenges, interest rate fluctuations, and competition cannot be ignored. Based on current trends, SoFi's stock could offer meaningful upside by 2025, but it comes with volatility and uncertainty. If you're considering SoFi as part of your investment portfolio, weigh its growth potential against the risks and diversify your holdings. Stay informed by keeping an eye on quarterly earnings, industry trends, and macroeconomic conditions. Thank you for watching. If you found this analysis valuable, please give the video a thumbs up to support the channel. Subscribe for more in-depth stock analyses and financial insights. And don't forget to leave a comment below. What's your outlook on SoFi stock? I'd love to hear your thoughts. Before we go, I've got something extra for you. If you want to dive deeper into SoFi, check out the link in the description to download a free report. It includes detailed charts, financial metrics, and projections to help you make more informed decisions. Also, stay tuned for upcoming videos in this series where I'll analyze other trending stocks like Tesla, Nvidia, and more. Hit the notification bell so you don't miss any of my future uploads. Thank you again for joining me, and I'll see you in the next video.